In 2022, we received over $25,000 in dividends and distributions. But we didn't just start out with that. We started small, and today we're going to talk about how you can start small even if you only have a little bit of money to invest every month. So stick around and we'll go over it all.
Hello and welcome back. If this is your first time on our channel, welcome! And it's so exciting because today it is our 100th video since we started our journey to financial independence on this channel.
Crazy, 2 years.
It is 2 years, we are just over 2 years. That's our 2-year anniversary. There you go, 50 videos per year.
Yeah, so total of 100. So thanks for coming out every week.
I can't believe that you are still here with us, but thank you very much. We're so grateful to be part of your journey as well. And if you haven't subscribed yet, this is a good opportunity because in 2024, this is our goal to become financially independent and don't have to work anymore. My name is Jean, this is my lovely wife Christine, and every Sunday we post a new video in our channel. On today's video, we're gonna talk to you about the importance of investing in a TFSA challenge that we started back at the beginning of 2022. If you don't know what TFSA is, it stands for Tax-Free Savings Account, which is the same one that we have similar in the US for the Roth IRA, if I'm not mistaken.
So,
Yeah? And what are we gonna talk today?
Well, everybody's always saying, you know, I don't have that much money to invest. What's the point? Is that money that I invest even going to be worth putting into an investment account? And we want to show you guys today that it is, and it's actually quite important and quite beneficial to go that route.
Yeah. What happens is at the beginning of 2022, we decided to kind of create this TFSA challenge. And every month we were committed to deposit $250 out of our checking account into the TFSA, and we were planning to buy, and we actually did buy the same stock or the same ETF. In our case, we used XAW.TO, which is an ETF who covers all the stock market in the world except Canada. The reason that we did use XAW is because in our case, we have a lot of dividend stocks in Canada. So we need to set some money aside and let the money grow outside Canada, because if something happens to the Canadian economy, 1, 2, 3, we might be impacted, but not as much.
Yeah, and we chose $250 a month. We know that on average, the annual contribution to your TFSA is $6,000. But for some people, $6,000 is a lot of money and they can't come up with that. So we thought, okay, $250 a month. I think Jean worked it out. It's about $8 a day. If you can save that, we wanted to say, here's what you can do with just even half of your contribution. And if you can continuously up that over the course of the subsequent years, amazing. So you can finally meet that full contribution. But if you're just starting out, you don't have to put in the whole 6,000, and we wanted to show you what was possible.
Yes, you can. And we are gonna show you right now the first, how do we call the first, oh my goodness, what is the name? Short. I found the name. The first YouTube short that we created on this content, and we are gonna be coming in just a few seconds. Today is January the 10th, 2022. I want to provide an update on my Wealthsimple Trade challenge, which I am investing $250 per month every single month in 2022. Let's go and take a look. All right, here I am on Wealthsimple Trade's app, and I just deposited $250, and I bought my first ETF, which is XAW, and it did cost me $247.59. I was able to buy 7 shares.
So as you saw in the little video there, Jean's first short, we decided to use Wealthsimple for a TFSA. The reason being, you don't have to buy or don't have to pay any commission fees if you're buying ETFs or individual stocks, actually Canadian stocks inside of Wealthsimple. So it's a great way to get started. And there's a link, I believe, down below if you want to open your own. Feel free to use that link. But just moving forward, inside of that Wealthsimple TFSA account, like Jean mentioned, we decided to start investing in XAW. And if you use one of these wonderful compound interest calculators that are all over the internet, it's going to show you a couple of different things. And we've chosen to use the interest rate or the interest rate of 7.75%, because that's what XAW has as their average annual return over the past 5 years.
Yes.
Okay, so we're going to put that in. And this is what a compound interest calculator is going to tell you you will be receiving if you keep your money invested over the subsequent time periods.
Yeah, don't worry about the link. We are also going to provide you the link to the calculator. There are so many options online, but you can see the one that we actually use it here.
So in year one, if you had contributed $3,000 like we did into the Wealthsimple account, you could reasonably expect at a 7.75% return to receive $3,109 at the end of 1 year. After 5 years, you would have contributed $15,000 and would be able to say that you might have around $18,250. 20 years later, you will have contributed $60,000. But now that $60,000 at 7.75% is now worth $142,673, which is an actual increase over and above your contribution of $82,763. So if we now just jump right into the $500 a month, and that's going to be what you would need to contribute to reach that $6,000 a year for your TFSA contribution. If you contribute $500 a month, after 20 years, you will have contributed $120,000, and the value of that portfolio would be $285,526, which over and above your contribution is an additional $165,526 just by putting your money into XAW.
Yeah. And the same way that we are using with XAW, you could do with anything else. If you are new to investing, this is really, really, really important. Don't take us as an example or anyone else. You have to think about it. What is your situation, what we wanted to do. In our case, XAW is the one that we use it because it does fit our portfolio, right? So you can see that it's possible, but is it really possible?
True.
And that's what we wanted to share with you now. We are gonna show you a table on our screen where we went through how we did it. Feel free to pause this video as we move along and you can see how we were able to achieve that. As we did say, it was at the beginning of 2022, depositing $250, and you can see that on January the 5th, we deposited $250, and the settlement column that you can see at the top, that's when we bought the stock, in this case XAW.TO. At that time, we were able to buy 7 shares, and the price of the share was $35.37, and the book value, which is 7 times 35.37, $247.59. The same way that you can see for the subsequent months you are going to see on your screen. But what is important is throughout the year, we were able to buy on average, the price between $35.37 and even $32.43, which is the last month that we have on our screen.
Yeah. And just a quick note, you're going to notice down, there's 1 month where we bought 1 share, and that's actually because we reinvested a distribution that we received.
That's a good point.
So you'll notice, I think it's June 8th, we bought 1 share for a whopping $31.05. But that's because we were reinvesting the distribution we received along with some of the money that hadn't been invested totally. Because if we invested $250, we only spent $247. So there's a few dollars left over at the beginning because we hadn't been able to buy fractional shares at that point.
At that point, which now we can. So basically you can get just $250 or whichever the amount that you have. I want to buy $250 towards that specific stock that we wanted to buy.
Yeah. So that's the breakdown of how we spent the $250 over the course of the year. And you'll notice at the bottom that December 1st was the last time we purchased, and we purchased 7 shares at $32.43. So how close did we get to that compound interest calculator's estimate of receiving $3,100 in the first year if we take the average return of 7.75%. Well, we all know how 2022 went. So how did our TFSA work out at the end?
We went as everyone else down.
But how did we come out at the end of the year?
We did come, I don't know, I have to look at the numbers because I don't remember. 2% down, basically.
Yeah.
Right?
And when you look at the rest of the market, I think only being down 2% by the end of the year in one account is quite amazing.
It's quite good. Yeah, it is.
Yeah. So we're going to look at these line by line and you'll notice the top of this column says dollar cost averaging. That's because each month we're investing. So it's not a lump sum that we just dumped in at the beginning of year of $3,000.
Yeah.
Every month we invested $250, which is considered dollar cost averaging into the market. And this is how it played out.
Yeah. Looking at the numbers, the total investors, as we did say, $3,000. If we get the average of the prices that we have throughout the year, our average price here was actually $31.77. You are going to see that the total number of shares that we were able to buy was 95.5763, and you can see the fractional part of the stock. Throughout the year, XAW, it pays 2 distributions per year. You're going to understand that some stocks, they might pay you monthly. Some of them might pay you every quarter, or in XAW's case, is twice per year. The first distribution that we've got, we have received $13.02. The second distribution that we've got, we have received $26.43. If we sum up those two, we received in total $39.45. Now let's take a look at what happened at the end of 2022. The book value of our stock, which is basically all the stock that we were able to buy throughout the year, is just go over $3,012. You're gonna see that this $3,012, it only includes the first distribution of $13.02. The reason for that is the second distribution of $26.43. It's only paid at the end of the year, the last day of 2022, so we did not include that result in our calculation. If you look at the market value, we have in total $2,959.99, which is a change of minus 2%. So we were able to buy every month $250 in stock, and at the end of the year, this stock was down minus 2%.
Yeah. And some people might say, like, okay, well, why am I going to invest my money into something and come out further behind at the end of the year than if I just put the $3,000 into a high interest savings account? Because you're not touching this money for years and years and years. And we're going to get to it in just a second. But when you look at the overall return of not only this particular stock, but the stock market in general for the year of 2022, we all know it was down far more than 2%. Yeah. So now that we've got the money in there and we're only down just a little bit over the course of the year, in 2023, when the stock market rebounds, which, oh my God, we all hope it does, the value of these stocks is going to go up. And that's where the beauty of appreciation and compound growth is really going to start coming through. So the fact that we ended the year almost even, I'm going to say it was almost even because we were only down $50.
Yeah,
right?
That's right. That is correct. So it's 2%, but XAW, if you actually invest, and you can see on your screen now, if you were able to deposit $10,000 buying XAW, at the end of 2022, this stock was actually down 11.77%. So you can start comparing the 2% that we were down with the 11.77%. If you have made up to this point, just wait a little bit more because you're going to see that this number is actually quite similar to the other calculation that we've had, which it does involve the lump sum.
Right. So the graph that Jan just showed, that's a lump sum deposit of $10,000 in January 1st or whatever the first trading day was of 2022. And then if you hadn't done anything, much like we're going to show you now, it would come out down 11.77%. So the fact that our dollar cost averaging account only down 2% versus 11.77%. It's pretty good.
Yeah. Let's look now at the lump sum with the same amounts that we've had. And I'm going to let Christine talk about the lump sum calculation.
So we did our wonderful math, and we all know Jean and I are not maybe the best mathematicians around, but we did our best.
Yeah. Take with a grain of salt and maybe some wine when you're doing the calculation.
So we have our actual numbers of our dollar cost averaging in of $250 a month. But what would have happened if we had just put $3,000 in January 7th or whenever we invested that first little bit of money and waited until December 31st? What would those numbers have looked like? Well, here they are. We would have had an average share price instead of $31.77 where we ended 2022. We would have continued with the same share price we purchased at $35.37. We would have only had 84.82 shares as opposed to 95.5763. The distributions would have been larger round 1 because we had more shares up front, but round 2, we would have actually had a lower distribution because by that point, we had more shares by dollar cost averaging in. And then if you look at the book value, it is slightly more because just like we did with the dollar cost averaging, we reinvested the lump sum first distribution and bought slightly more shares. I think it was 0.8 of a share. But the real difference comes when you look at that market value. So we were only down about $50 in our market value from what we've invested into XAW with the DCA. But when we lump sum invested, our numbers came out to $2,651.58. We rounded and it came out to down 12%, which is exactly what the graph shows as being 11.77% if you round it, because we rounded.
Yeah.
So pretty close. So in this case, I don't know which one's better.
Usually, from what we have heard, when you do lump sum and you are thinking about a long time horizon, when I say long time horizon, I'm going to say
the 20 years,
20 years plus, a lump sum is the best option. And assuming that you're not going to do anything else, you leave the money there, you buy your stock, go live your life, and 20 years after, come back and look. Don't do this because you never know what's going to happen, but you guys get what we mean, right? So it might be a lump sum. In our case,
well, I mean, if you look at just this example, it looks like dollar cost averaging wins, right?
Once there.
Yeah, like maybe if the market is a bear market, maybe dollar cost averaging is your best investing solution.
Yeah.
Or if it's a bull market, just get your money in there and wait for it to take off. I don't know. It's going to be dependent upon your own personal style of investing and what, like Jean said, what you're comfortable with. But that being said, we're going to take this one step further. Let's see what 2023 brings. We're going to keep doing this into 2023. We're not changing anything, $250 every month. And then we'll run the second set of numbers again with a $6,000 investment, $3,000 again here in January. And we'll run these numbers and see what we come up with at the end of 2023.
Yeah. So I guess that's it. Did I forget anything?
I don't know. Did we forget anything?
Yeah. I hope this video is not boring, but we just wanted to show you, if you are new to investing, that it's possible to invest. You have to start no matter what.
Yeah.
If you are thinking about, oh, I don't know this, I don't know that, even us, we don't know so many things, but every step along the way, we talk to people who understand more than we do. We make sure that this is, the path that we wanted to take, and we take risks. We definitely need to take risks. Those risks are calculated, but that's what you need to do, guys. It's $250, and you can use the compound interest calculator and see what it's gonna look like in 5 years or 10 years. Nothing is guaranteed. If you say, I wanted to do this with like a lower interest, you can also check that if this is what you are looking for, but you have to start.
Yeah, we just use that 7.75% because that's the average return for XAW. And really, I don't think it was too far off the mark had it been a normal year. And you can look at XAW's history. Yeah. This is an odd year out.
But it's a good one. It's a good one to see what happens once the market goes down. And you can see what's going on. Yeah. XAW was down 12%, by joining DCA, we're only down 2%. At the end of the day, as long as you don't sell, as long as you are okay with the plan that you have in mind, you will succeed. You just need to start.
Yeah, that's the key, right? Just get your money in there and try to stay positive. I mean, we did a few videos about our ups and downs, emotional ups and downs. Everybody has them, right?
Yeah.
That's part of this whole investing journey. So stick it out. I'm interested to see how this turns out at the end of the year for 2023.
So, Joanne, are you?
Yeah.
Let us in the comments below. We hope that we're well. Go ahead.
No, that's it. That was the video for this week. So we hope everybody's staying well and safe and enjoying, if you're somewhere nice and warm, the sun and sunshine. And if you're up here in the north with us, the cold and the wine.
Yes. In the meantime, thank you again for your time. If you find this video valuable, please do share, because this is the best way that other people will hear more, understand more about our journey. Not only us, because it's not about us, it's always about you, but the journey to financial independence. They can learn something new, and we will see you in our next video.
Yeah. And give us a like, because it's 100, guys.
100. Yeah.
Thanks.
You. Take care.
Bye.
Bye. Good.
Yeah?
I think so. Let's see. It's if it is still recording.
Every time. I bet you it is.
Okay, it is recording. Oh, shh. Keep. Can you believe it? Is your phone off?
Yeah, it's yours.
Well, that's the one recording. Feel free to pause this video as we move along, and we can share. No, what is it? Feel free to. Yeah. Feel free to pause it. I need wine.
Our days get long, guys.
I know.